Hello, today is October 7th, 2023. As always, we'll start with our disclaimer. We'll go over our calls and make some predictions. Just remember, my calls can be completely wrong. Any trade you make should be made at your own risk. On Friday, look for the pattern with the early low, and we certainly had that. And Monday's pattern should have the early low as well. What we said was that unless we gapped up and took these highs out, we should see 42.33.19. But the rules I had wouldn't let me go short because I thought we were very close to a major low, and the low was either going to be made soon or was already in. Here's what we said. And these are the patterns I believe we'll see next week. Well, we certainly didn't gap up, and we got the target. This low was in, and that held. And then we had this rally. We took out 42.89.25 from earlier in the week. That target gets crossed off the list. This was also over the wall with gap pattern. Typically, this is a support resistance area. Usually you'll hit that and that's resistance and we drop, but in this case, bullishly, we hit it and that price became support. We've been looking for a low in this area for well over a week, probably closer to 2 weeks, and this is pretty much everything you need. You still have to get confirmation. You have to trade over this close by 1 cent. Doesn't have to be Monday, but you have to do that. And usually before too much time passes, you need another follow-through day, a strong rally day like this. But we had so many indicators for a low in this area, there's no reason to think that won't happen. MEJT said there was an ultimate buy signal and a buy signal here. We got the minimum immediately, but nothing requires us to stop there. There are some negative things here. I don't like the fact that the close was under the midday high. Action in the last 5 to 10 minutes doesn't always mean anything. It could easily be reversed when we open, but it would still have been a more positive pattern had we maintained this high. It is possible to count this as 5 waves up. If that's wave 3, you can see that there's a Fibonacci relationship to wave 1, which is 61.8%. There's a Fibonacci relationship with wave 5, which is 50%, so you can count this as 5 waves up. You can argue that that's 3 waves down already and we'll keep going higher, and there's nothing wrong with that count. But it's not the only count, and instead of being an ABC, it could be just A of an ABC. And of course, the whole count can be wrong too. Well, this red line is a support resistance area. It's this old high from a year ago, a year plus. It's also where the market bottomed out here, and we hit this line in a straight line up. And the rule for that is either you gap over the line or the line wins. So if the rally is going to continue unabated, it should gap over the line. And if we don't gap over the line and you move through, it'll probably retrace. But this is pretty strong action, and whether we gap over it or not, I think we have much higher to go. Well, this is the weekend, so we talk about the long-term picture. Let's see how much higher we could go. Well, we said a couple of weeks ago, you take the middle swing here, the middle swing of the middle swing, use a Fibonacci target, you get about 5,087 for a possible high. This is the monthly to mark chart. We're on a sequential sell signal, but the stop loss is way up here, loosely interpreted around 51.11. So 50.87 could be hit without violating the stop loss and indicating a major top. The FOMC announcement price was 44.5236. If we get the typical three-leg whipsaw, we traded about 236 handles under that price. We should trade more than 236 handles over that price, and that gives us a target of overtaking 46.8827. That's over this high. But what if we hit our 5,087 target, and what if that's leg magenta 5? This is 5,087. If this is the end of wave magenta 4, and if we hit that in wave 5, you can take the height of 1 through 3, put it right here at this low, and 78.6% is 5,087, the exact same price. So we have balance of the waves at 5,087 with strong resistance at 51.11, give or take a little. Now, again, just because that works doesn't mean something else won't. And the indicators I use for long-term charts don't have the level of accuracy I use for shorter-term patterns. But at least this longer-term pattern is compatible with this down leg being over, with us hitting at least 46.88 over this, and with every reason to believe, if that's the right count, that we're going to hit the 5,087 target sometime next year, I believe. And if that prints, there could be strong resistance, because the three-leg whipsaw would have 1, 2, and then the third leg should take us even lower than that. That's really too much for me to predict ahead of time. These things don't always work. But if we're right about this being a major low, we should have quite a rally in front of us. Monday's pattern has the early low regardless of where we open. Typically it's a rally day with a high in the final hour. It's bearish. If it is bearish, more weakness should follow. Now, Friday's reversal still needs confirmation by trading over its close and having a follow-through rally day soon. Those haven't happened yet, but I believe both of these will happen, as numerous indicators that we discussed before are compatible with a major low being established. The market has every excuse to pull back on Monday, and it's quite bullish if it gaps up instead. We have 5 waves up on the 5-minute chart. We've rallied to strong resistance in a straight line, and the close was under the midday high. So there's every reason to think we're going to pull back. But if we gap up instead, if this is in fact an ABC and we gap up, we could have a straight line move up. If that's one, I'm not saying that we are going to gap up, but if we do, this could be a straight line move up. There's a pattern where you have a rounding top like this. You undercut the lows briefly, and then you come back. This rounding top pattern with a violation of the lows tends to rally in just a vertical straight line. It's one of the most unbelievable things you'll ever see if that's what this is going to be. So we'll have to see if we gap up. If the FOMC whipsaw plays out as it normally does, we should exceed 46.8827 cash with no obligation to stop there before the rally leg is done. There are unfilled MEJT targets near the all-time high, and if this is wave 5 up, we're likely to see them print with new all-time highs. So it's the pattern with the early low, tends to be a rally day, every reason to pull back, but if we gap up instead and maintain it, this could be a huge rally, and that we're not going to know until Monday. We're also not going to know how the war in the Middle East is going to influence all of this. It's pretty tough to predict. Monday's pattern has the early low, and that's today's call.